we've got sulfides, right? Which is about
Yep.
20, somewhere between 28-30% of the market,
Yep.
right? About that, and then we've kind of got laterite, which is the rest, right? So let's
Yep.
break those down for people and say, the pros and cons of each.
For laterites, they're very low cost to mine because it's basically dirt that you dig out of the ground, and a laterite mining operation, in the Philippines and Indonesia is literally a few trucks, a shovel, and then you put it on a barge, which puts it on a boat, and that boat goes to China. That's what's involved in laterite mining. Where the laterite gets tricky is you have to build a big plant, because you can't upgrade the ore at all. You basically have to dump it all into a furnace to melt it and pull the nickel out, or you have to dump it all into a vat and dissolve it all and then pull the nickel out that way. And so both of those steps require a big chunks of capital. Now, and that's always, why these things were slow to develop, is they required a fairly significant investment to be able to make that, because they were in remote locations, because laterite deposits tend to be found around the tropics to create the conditions to make the laterite actually happen. On the sulfide side of things, the mining tends to be trickier. Again, higher grade underground mines, you have to build a mine, dig a deep hole in the ground to get it. Larger scale open pit mines, like we have at Crawford, and which we'll get there, is an open pit. The advantage is you start out with a lower grade material, but with a very, for not a lot of dollars, you operate a mill. Again, the mills themselves aren't cheap, but that's the big chunk of the cost for a sulfide operation is you build the mill, and then you can upgrade the ore, in our case, deposits like this from, say, 0.3% nickel to 20% nickel, where a laterite deposit starts with around 1%, 1.5% nickel dry with a third water, which makes the 1% product that you have to all dump into a furnace, and you don't get any upgrading initially. So, those are the sort of the two sets of costs, or sort of the way the deposits are structured in two ways. And then historically, it was either ferronickel for laterites or integrated producers for sulfides. But now that the fact that you have these different market channels opening up, those companies that are able to find an edge to make another 5 or 10% of the price and have that come back to them and back to their shareholders, then you're going to have those operations should do well going forward.
Okay, so let me get this right. So laterites, which is about 70% of in terms of volume globally, those are it's literally, I should say, moving dirt, right? They're big, expensive, capex intensive projects typically, right?
Yeah.
So we know there's sort of $1 billion minimum, but usually go on to be a lot more than that, depending on the scale. Even though you're putting the operation on top of the ore body, they are seriously expensive in terms of capex. Is that right?
Yeah.
Right.
Yeah, that's in most of the world. The one innovation the Chinese did with Indonesia is, the Western companies would always try and build the biggest furnace ever built, right? Every new plant had the biggest furnace ever. The Chinese kind of said, "Oh, that's nonsense. We've already got one that works. We'll just copy and paste that 20 times, because we know the cost of the 20th is going to be a lot less than the cost of the first one." So they've kind of made it much more scalable. But it's still a pretty hefty. It's a multi-$100 million price tag for the Chinese and Indonesia to get started.
And that's because it's multi-100 million. So it's not necessarily billion, but that's because it's sitting on top of the body.
Yeah.
Okay, great. Okay, so as an investor, I'm thinking, am I more likely or more unlikely to be investing in a laterite project if I'm interested in nickel?
So there's one example. So Nickel Mines is basically joint ventured with Tsingshan. So they basically own a portion of Tsingshan's plant in Indonesia. It effectively allows Tsingshan to give a market window on the economics of their business. That's why it makes sense for Tsingshan to do that deal. So that's a way to get exposure to a market leader in that case. The other way to do it, you've got a few pure plays like PT Inco, where again they've got a large resource and a pool of sunk capital. So you as an investor benefit from the fact that they built that plant back in the 70s, expanded in the 90s and expanded again in the 2000s. So, there's not as much, you actually see some free cash flow because they're not having to continually reinvest it in the business. But then, a lot of the other laterite projects, are embedded into other, larger companies. And there aren't a ton of new, there's only a handful of standalone nickel laterite projects as well. So, it's not, there's not a lot of waste for investors to play the space broadly.
Okay, so I guess the thing that terrifies me is you got to pay that money back. So if you're talking about hundreds of millions of dollars at best, and probably into the billions of dollars, and you got to pay that back, it's going to take a long time, or you got to have a big operation to do that. So me as an investor, I'm looking at that, and that's the thing that makes me nervous. But let's come on to sulfide operations, because again, companies that are building these things, they need to have access to a plant. Either they build it or they have access to it down the road. And margins are controlled there. So again, for sulfide companies, if I'm thinking of investing in sulfide companies, what are the things I should be looking out for in terms of their ability to control cost?
Yeah, so the key thing, you've got sort of two groups. There are basically people are either just mine or mine mill operations that sort of feed it into a chain, and there's a number of companies in Western Australia who operate there. The key thing there is you just need to be able to see what their operating costs are relative to where nickel prices are, and are they able to negotiate terms with the downstream person that they have to supply to actually earn any profit. The thing that is changing, and I think that's what's going to be somewhat appealing to sulfides in general, is again, for the electric vehicle sector, you're going to see a bunch of processing capacity develop to convert nickel in whatever form it is into a product for the battery sector. So the oligopoly will start to break down over the next 3 to 5 years. So, nickel sulfide resources, in my view, will inherit as that oligopoly breaks down and more value flows back to the miner. The value of the sulfide resource in the ground will increase significantly relative, as those options become, available, to the market. The other part, even a lot of sulfide operations, the nickel is a fairly capital intensive business all the way around. And so, one of the challenges of investing in laterite versus sulfide is just happens to be where these deposits are typically located. Again, there's nothing wrong with, if you have to make a significant capital investment, again, in iron ore, BHP, Rio Tinto, those are hugely profitable businesses, but they have to make that upfront investment. But they're able to do that because they're operating in Australia. They have 50 years reserve, and they're going to just mint a huge amount of free cash flow, over that time period, without any risk that project will be either physically or economically confiscated by the local government or the country. That sulfide deposits, you find them in lower risk political jurisdictions. So again, in Canada, you can spend $1 billion knowing that the government's not going to change the rules on you and make it impossible for you to realize that cash flow. Again, I would caution people when you're looking at laterite projects, just look at that jurisdiction to see, okay, if they are able to raise $1 billion to build the plant, is there any risk that the government's going to do something to confiscate some of the value there, in the copper space, those companies that tried to operate in the Congo and Zambia, for many decades. It's been it's been pretty challenging during that time frame, and there are other jurisdictions where there are nickel laterite deposits that are almost as challenging as those countries.